Bad credit doesn't necessarily mean you cannot get a mortgage. It's a lot more complex than that. It all depends on what the problems actually are. And don't just go off purely off your credit score, because let me tell you now, your credit score doesn't reflect half the things that are actually within your credit report. Hi guys, I'm Eva, a mortgage professional talking all things finance. Now today's video is all about bad credit, having bad credit history, and what that actually means when it comes to getting a mortgage. Now a lot of people are under the impression that once you've got bad credit you cannot get a mortgage, which couldn't be further from the truth. There are a lot of lenders out there nowadays that specialise in helping people who have bad credit history to get a mortgage. So in today's video I'm going to go over the main culprits when it comes to bad credit history and what the criteria actually are when it comes to lenders. The research for this video included 72 different lenders, so you can have a broad idea of what they will and will not accept. So without further ado, let's jump right into the video. Right, so let's start with missed payments, which to be honest is probably the most common problem a lot of us have on our credit history. Now missed payments are normally categorized into three separate types. So you've got your mortgage payments, you've got your unsecured debt payments, and then you've got your communication and utility payments. And I suppose they go in line of severity. So if you miss a payment on your mortgage, that's a lot more severe than if you miss a payment on your mobile contract, for example. And that's how a lot of lenders view it, because it all comes down to that risk factor. If you have missed a mortgage payment previously, the chances are you might miss a future mortgage payment as well. And that lender is giving you money for a mortgage. So obviously they're scared that you're not going to repay that. Whereas if you've missed a payment to O2, they ain't really that bothered about that, are they? It doesn't really affect them that much. But when it comes down to missed payments, it's all down to what actually happened. Did the missed payment happen as a result of you not having any money in the bank account? Or did the missed payment happen because you just didn't plan properly, because you didn't set up a direct debit, because you didn't have that automation in place? There are so many different reasons why people end up with missed payments, and 9 times out of 10 it's because of simple human error, which happens. And lenders understand that a lot more now. So in short, as long as you don't have more than 1 or 2 missed payments in the last 3 years and the total amount of those payments doesn't exceed around £200, you should be able to obtain a mortgage on normal terms. However, this does vary from lender to lender. So there are certain lenders out there that have a zero bad credit tolerance policy, but there are some that will ignore kind of one-offs. So when speaking to a mortgage advisor, make sure you have as much detail as possible as to why that payment was missed in the first place. And if you find yourself in a position where you have got a missed payment, make sure it's all been repaid and the account's settled, and also try and contact the company to see whether they can rectify it, whether there is a way of removing it off your record. Because if you don't try, you don't get. By the way, I am so sorry about sounding so nasal yet again, but hay fever is a real BITCH right now, and yeah, it's just not good. So bear with me about the whole nasally thing. Hopefully it doesn't put you off too much. Right, let's crack on. So let's move on to defaults. So basically, if you have 3 to 6 consecutive missed payments, they will most likely be registered as a default. All depends on the lender, so some will give you more leeway than others, but ultimately if you have so many consecutive missed payments, they will be registered as a default. Now this is a lot more serious and lenders aren't so relaxed about it. So when it comes to defaults, lenders ideally want them to be less than £500 and registered or satisfied at least 3 years ago. Now once again, there are specialist lenders that will consider defaults that have either happened sooner or they're for a larger amount. However, when it comes to having defaults, especially when it's over a certain amount or if it's quite recent, what you do have to bear in mind is that you will require a much higher deposit. So the maximum loan to value that these lenders typically offer are around 70 to 75%. So you'll need a 25 to 30% deposit in order to be able to secure that mortgage. And also, to add fuel to the fire, the rates are a lot higher as well. So you need to make sure you can definitely afford the mortgage. But from a lender's point of view, when they see defaults, there's obviously a clear indication that something has gone very, very wrong. hence why they have to put those loadings onto the LTV and the rates, because ultimately it poses a higher risk to them. You are more likely not to repay the mortgage, even though you've probably sorted yourself out by now. So if you do currently have a default, you've got two options. You can either bite the bullet and get the mortgage with a higher deposit and obviously higher rates, or you can wait until that default no longer matters. And after 6 years, it usually doesn't matter anymore. Some lenders will ask whether you've ever had a default, but chances are, as long as it's been at least 6 years from the day that it happened, you should be absolutely fine. Okay, so let's move on to CCJs. Now, when it comes to CCJs, a lot of lenders just point blank hate them, refuse them, don't want to see or hear them, whatever. However, as long as they are satisfied, you've got more of a chance of actually obtaining a mortgage, especially from a mainstream lender. The main two criteria that I found were that it has to be satisfied and it has to be less than £500, and ideally satisfied over 2 to 3 years ago. Now, there are lenders that will accept unsatisfied CCJs and instead will go off the date that it was actually registered against you. But once again, those lenders will require a higher deposit and will offer higher interest rates. So your best bet may be to wait until it's been 6 years since that CCJ, until it kind of falls off your record. So then we've got the IVAs, or individual voluntary arrangements, and debt management plans. So these usually happen when you have to have some debt written off, or you want to combine all your debt together and hopefully have lower monthly repayments. Now, if that's the case that you're in, things are once again a little bit stricter, or a lot stricter if I'm honest. So with IVAs, they usually need to be fully satisfied for a period of at least 12 months in order for more lenders to consider you for a mortgage. Whereas with a debt management plan, as long as it's conducted satisfactory, so you're keeping up all your repayments, there are no missed payments, nothing like that, it's all up to date, some lenders will accept that and they will accept your application. But once again, as with the previous one, you will have to have a higher deposit and you will be subject to higher interest rates. Now, with these ones, deposits could be as low as 20% rather than obviously 30%. However, they're still a lot higher than your kind of 5 to 10% deposits, which a lot of us have. Ultimately, the longer you wait, the better your chances are of actually obtaining a mortgage, as long as there's nothing else that happens in the meantime. Now, let's move on to the heavy stuff. So let's start with repossessions. Now, ideally, if your house has previously been repossessed, lenders want to wait at least 6 years from the repossession date to grant you a new mortgage, providing there has been nothing else on your credit file. So you must be completely clean and ideally not have any debt at all. However, some lenders will accept you just 2 years after the repossession has happened, but once again, subject to a higher deposit. So we're talking about 30% deposit and higher interest rates. But the longer you do wait, the better chance you've got of actually accessing better products and better rates. And lastly, we've got bankruptcy. So most lenders need you to be discharged for a certain period of time. Now, normally bankrupts are discharged after 12 months unless there's been some sort of delay. So there are specialist lenders that will lend to you straight after you've been discharged. However, majority of them need you to be discharged for a certain number of years. More lenders will be willing to consider your application after a period of 3 years, and then the doors really do open up after 6 years of being discharged. So once again, time is key in this one, as if you decide to obviously get a mortgage sooner than that, you will be subject to higher deposit requirements and higher interest rates. So as you've probably realised by now, there are a lot of common themes when it comes to bad credit, and ultimately, if you do have something wrong with your credit report, you will be subject to a higher deposit requirements and higher interest rates. Excuse me. Now, the biggest problem when it comes to bad credit is when you've got a number of things combined. So you've got a CCJ, missed payments, default, they're all over the place and they're for quite a large amount. That's when you're less likely to be able to obtain a mortgage, even from the specialist lenders. And if that's the case with you, your best bet is to give it time and use that time to not only clear off any outstanding debt, but to also save for a higher deposit, as that will help you massively. So with that being said, if you found this video useful, video, please give it a like and also subscribe to my channel for more mortgage and finance content. As always, if you have any further questions, please feel free to pop them in the comment section down below, or alternatively contact me directly via email. Thank you for watching, and I'll see you guys back on Monday with a brand new video. Bye guys.